And thank you all for joining me today. That was a long introduction. I'm sorry about that. But really the only thing that matters, I think, when I hear my introduction is that I'm a trader. Uh, I've bumped into, when I've taught classes and seminars, a lot of people that don't actually trade that are teaching. And so I not only trade, but I use our product, the product that I'm representing in VectorVest. As Reed said, I've been with the company for about 10 years now, and I started out with my investing career with VectorVest, which I'm very thankful for. Of course, I started around 2003, 2004, so that means that I had VectorVest during 2007, 2008, and I was able to lock in my 401k at a very healthy level, and I continue to thank God for that. I've been able to give my 401k a major boost, but over the years I've switched more and more into trading options, and I also use VectorVest to manage my portfolio of options as well. So I'm excited that I'll get to give you some technical analysis insights as well as show you the system that will make those insights even more effective. We're going to cover a lot of great information, so let's officially get started. We'll be looking at 3 techniques to help you capture the trades of a lifetime. And the way we'll do that is by finding some of the most effective technical crossovers manually and then using an even easier way with the VectorVest system. Best of all, you can start using this information to make more profitable trades right away. Really, you can get started almost immediately with technical analysis. If you're not already using it, really dedicate some time to it. It doesn't take long to have a very measurable impact on your profitability, so it is very much worthwhile. For the rest of our time, if you have any questions or comments, just shoot them over in the question box and I'll do my best to get to them. First things first though, I want to introduce and show you how to use 3 of the top technical indicators. You'll see what they are and what to look for on a graph. So if we move forward, I want to show you one thing here. As I mentioned, I personally use these indicators and tools that I'm going to show you at the end, kind of put it all together. And they're actually what I used to initially manage a model portfolio in real time. So this was a paper portfolio. I was doing mostly option trades, so I needed something to represent what was happening to the stocks, and then I would go ahead and trade the option. But this is now up more than 62% since I started in 2013. And the best part is that it's completely hands-off. And it's had about an 85% win rate. So definitely for a feel-good factor, that win rate is pretty critical. If this sounds like it might be interesting to you, hang out until the end and I'll give you all the juicy details with click-by-click instructions. In the meantime, we're going to start by looking at the first of our 3 indicator crossovers, and that is MACD. This is a trader favorite, quite possibly the most popular technical indicator, and I think it's because it's so easy to understand. It's effective, probably because so many people are using it, and it's a great way to get started in technical analysis. The letters stand for moving average convergence divergence, and it'll help us pinpoint meaningful changes in a stock's price direction and momentum. It's a trend-based indicator because it's based on the 12 and 26-day exponential moving averages. It's not important to get caught up on the calculation right now. That's really for a different talk. Instead, our focus today is going to be on how to use these indicators and use them effectively. Let's take a look at an example. Here we have Johnson & Johnson on your screen, and down below at the bottom you're going to see that MACD. So we have the MACD line in blue, we have the signal line in white, and we have our histogram in the yellow. So a basic way to use this is just look for the histogram to cross that 0 threshold, that neutral threshold. If it crosses to the upside, that's obviously a bullish example, and if it crosses to the downside, that's a bearish example. So pretty simple. And if you look at where the histogram is Yes.
It looks like your screen's a little bit off kilter. On mine, it looks like it's a little bit to the right. Could you pull, let's see if you can pull it over a little bit to the left because we're missing a little bit of info.
It is actually maximized. This is
Oh,
just the
okay.
PowerPoint slides. So
Gotcha.
maybe
Okay.
it's the PowerPoint slide.
Okay. All right. Sorry to interrupt.
That's okay. So with and we can, if we have time at the end, I doubt that we will, but if we do, we can jump into the VectorVest program. These charts are from the VectorVest program, and I'll analyze some of your stocks. As far as getting back to the histogram, though, if you'll notice that when this histogram is positive, the MACD line is above the signal line. And that's why you can know that just by looking at the histogram rather than necessarily focusing on those two lines. Now, if we look at this chart of Johnson & Johnson, you can see that the histogram went positive right where my date line is. This is on June 26, 2013. So I ask you, would you have made some money entering at that point? Definitely, right? And then let's go to another point, a little bit earlier. Would you have made money there? Well, as long as you had a good stop loss in place, you might have made a little bit of money. Not quite as good as we made the first time around. Now, oops, keep going backwards. Sorry about that. Here's another one where the MACD went positive. That would have been another nice gain. And here, and here. Now, think about this. As you get in at these crossovers, you don't have to get out when they cross to the downside. You certainly can, but you don't have to. You can simply put on your trailing stop, and when the gas runs out, go ahead and exit that position and take your profits. So just because you're using one technical indicator to enter, don't think you need to use that same technical indicator to exit. Almost every technical indicator is historically looking, so it's lagging. And if you use the same indicator to enter as you use to exit, then you have the same lag time. Well, that works to your disadvantage rather than your advantage. So depending on whether you're somebody that wants to be a little bit slower to get in and quicker to get out, or vice versa, you're going to choose your look-back periods and your technical indicators based on that. Again, the MACD uses, at the longest time period, a 26-day exponential moving average, which is really nice for a prudent investor, actually. So here is our Johnson & Johnson example. Lots of opportunities to make profits there, and a large part of that is because the stock was trending up. So you do want to use this as a trend indicator. You want to use it on a stock that is already trending in the direction that you want it to go. You'll have a lot more success that way. And you'll see this on stock after stock as long as it's trending. The more volatile the stock is, the more difficult it's going to be to use MACD. Positive MACD crossovers more times than not, though, will give great buying opportunities on any trending stock. They're not going to be 100%, but if you use them consistently, you should do very well. Two things I want you to be aware of here, though. Using crossovers below the histogram is going to be more aggressive, but they offer more explosive profit opportunities. So if we look at that first crossover that I showed you right here, that was a nice big run for that stock, right? Same back here where we had the crossover happen below the histogram. The stock is more oversold at this point. In fact, it's telling you that the stock has pulled back enough that the 12-day exponential moving average has crossed below the 26-day exponential moving average. And they won't be crossed to the upside until that MACD line actually crosses that equilibrium, that zero line of the histogram. The second thing to be on a lookout for is divergences. It may take a little bit of practice at first, but you'll start to pick up on times when price is hitting new highs, but the MACD is hitting lower highs. So that's a bearish divergence. This isn't necessarily a bearish sign that the stock is going to tank, but it's a clear caution, and it often precedes a correction. So if you look on here, and I wouldn't be super concerned about this, I'm not going to lie to you and in hindsight say I would have been, but there is a bearish divergence here where you have the stock, Johnson & Johnson, hitting a new high, and you have the MACD topping out at lower and lower points. So that's your bearish divergence, and actually on that third lower high, it actually did go through a bit of a correction. So you just always want to be on the lookout for that, potentially tighten up your stops so that if you have a nice profit, you don't end up giving it all back. Now, moving on to the downside. What about crossovers to the downside? Well, if we use this crossover right here to protect profits, that would have worked out pretty well. And also, got to go the right direction here. If we used it most recently on August 7th of 2013, that also would have provided a really nice time to protect profits. You might think, well, couldn't I have gone short at these points or been bearish? You could have, but it's high risk. This is a good stock. It's a solid dividend-paying stock with a nice earnings history. So, and over this last year, it has hit new high after new high after new high. Investors love those stocks. They might take profits, or the stock might respond to a market correction, but they tend to come back to those stocks again and again, pushing them to higher and higher prices. So to short that kind of stock would be a little bit dangerous. So basically, to recap, with MACD, crossovers are not only great entry signals, but you can use the negative crossovers as a way to protect yourself, potentially even use option strategies just as a little hedging measure, like covered calls, or if you really think it might get a little bit more severe, a married put or a collar. So our next indicator that we're going to go over is going to be support and resistance. Another very popular trading technique, and one of the great things about VectorVest is we have a way to automatically draw the support and resistance lines for you. So that's what you're seeing on your screen. These are just the automatic program-generated ones. And if you do need to draw your own support and resistance levels manually, it's not hard. You're simply going to connect 2 or more price points to create a floor and or a ceiling that price tends to rebound from, because that's what support and resistance is. It's a threshold that blocks the price from moving further. Support should have just lit up on your screen, is a point where the stock prices have stopped going down and they begin to go back up. And you want to see that on multiple occasions. So it has to be at least twice, otherwise you don't know where to draw that line. But the more frequently that you can draw that line across and see the stock reversing, the more significant that level tends to be. You can use the highs or lows of the day to connect your points, or you can switch this over and just use closing prices, because of course the closing price is the most significant price of the day. I tend to use the highs and lows to find my support and resistance points, but you can select both in the program, and of course you can do both on your own. As far as resistance, that's just going to be the opposite, of course. Resistance is a point where the stock prices have stopped going up and they begin to come back down again. At least twice, but it can certainly happen more often. The more often it happens, the more significant that level tends to be. This is the ultimate crowd mentality indicator. If you think about this, have you ever bought a stock and watched it go up, but you didn't sell it because you thought it would continue to go up? Your kind of greed takes over. Then what happens? It comes back down. And you're thinking, man, I should have sold it, and if it gets back up there, I'm definitely going to sell. Then once the stock price reaches that level again, all the people who bought it back here, when it started reversing, well, when it gets back up here, they sell, right? Because they said, hey, I'm not going to give it up again. Next time this stock gets to where I should have sold it before, I'm going to sell it. So that creates that downward pressure on the stock's price momentum, and it tends to correct from that point, as we saw right here. Now it did it again for a third time. So really amazing how effective support and resistance is. Don't let it intimidate you, and think of it as a zone. I think that's very important. It's not a specific, don't worry about connecting every single point to the penny. Think of it as a zone, and your tolerance is going to determine really the width of that zone. You might decide that support and resistance is going to be within about 2% of a certain point, and anything that falls within that range is going to be considered your support or resistance zone. So how do you use support and resistance in your trading? Well, it's probably pretty obvious. If you see price hitting a support level and bouncing off, that's a bullish sign. It's hit the floor. Typically, price is going to continue to rise until at least the next resistance level. So when price bounces off of support, that's a buying opportunity. The other buying opportunity is when price breaks through a resistance level, especially on high volume. Think about it. We already said there was built-in selling pressure around a resistance level based on crowd mentality. If a stock is able to overcome that and bust through that resistance level, that's very bullish, and it would indicate a buying opportunity, particularly, again, on high volume. Second, you can also use support and resistance to indicate when to exit a position. So if it's retracing resistance, meaning it's now coming down, it's hit resistance and it's starting to go the opposite direction, well, that's a bearish sign. Typically, it's going to continue to fall until the next support level. So if that's a ways down, you might want to go ahead and get rid of that stock. If it's at a fairly low level, if it's not too far from where the resistance was hit, then you might want to just sell a covered call or do some other defensive trading strategies where you can still hang on to the stock if that's your goal. But additionally, if you see price breaking through a support level and then moving lower, that's a big bearish indication, particularly on high volume. Typically, the price is going to continue to fall until it reaches that next support level, which on a trending stock can be a very long way down. So in a minute, I'll show you how you can automatically find stocks with these patterns, but for now, we're going to go on to our last one, which is going to be using the stochastics oscillator. So the last technical indicator basically helps you pinpoint overbought and oversold conditions, which is something I get asked a lot. You know, what particular indicator do I like to use to find those particular conditions? And I love stochastics. I know there's some other ones out there that do it, and RSI, for example, is just one line, but don't let the squiggly lines confuse you here. It's actually very easy to use. And we'll take a closer look at this Merck example. On the lower end is the level of 0.20. So you see that kind of pinkish line at the bottom of your screen. Notice when stochastics was below 20, the stock was near a bottom. A buying opportunity occurs when stochastics, moves from below 20 back above 20. So you can see this again and again. Here we have it. Nice little short term. Even though the stock was not trending, it was still a nice little short-term gain. Again, it goes below 20, comes back above, another short-term gain. Here's a really nice long gain. I wouldn't have necessarily anticipated it, but hey, I'll take it. Same here. And we can do the same to the top side. So the line that just appeared is going to be the 80 level, and that's going to be the overbought level. So the stock tends to correct and pull back at that point. Now, it might only correct for a few days. It might be a very small percentage, maybe 3 or 5%. But why get in at that point if you don't have to? That's just silly. Especially if you have a tight stop loss, you're virtually guaranteeing yourself a loser. So you want to get in when the stock is essentially not overbought. You don't necessarily have to wait until it reaches, if it was up here, you don't have to wait until it reaches all the way below the 0.2 level. You can get in, for example, right here, where it's kind of bouncing off or crossing that median level, that basically 0.50 level. So if you really like this position, go ahead and get in here. At least it's not an overbought level. It may not continue to go up. That's okay. That's why you have stop losses. That's why you put on your protection. But it'll give you a much better entry point, and really that's what we're all looking for. I'm sorry?
I'm still getting a bunch of feedback saying that we can't see the bottom of your screen. Could you minimize it so it's not the full screen so we could just see a portion of it? Then we can probably scroll down, because right below that 50 line, yeah, if you can pull that up, pull up your PowerPoint screen a little bit.
Okay.
And then move over. I don't know if you were able to do that or not. But
yeah, usually I have a box that allows me to see what the audience sees, but you don't have that on this control panel, so.
Oh, I apologize.
No, that's okay.
That's on me then. Okay, so now we can see it fine. Now we can see the entire chart for you.
Let me just do one other thing.
Okay.
Let me maximize it again. Did that help at all, guys?
Okay, so now I'm seeing the 40 line. Is that the bottom of the chart?
If you can see the pink line, that's the 20 line.
Okay, no, we cannot see the pink line.
Okay, so I will go ahead. It won't be pretty, but we'll go ahead and kind of do it in this view.
Okay, yeah, I can see. We can see the entire thing from there. Yeah, unfortunately, I guess it's something either with mine.
That's okay. It's probably my resolution. Come to think of it, I did not change to a lower resolution, so that's probably what it is.
But we are good to go right now, though.
Awesome.
And I won't interrupt you again.
No, I'm glad you did. Thank you so much. And
I
can't. I'm by myself, so I can't read your comments and
okay.
the crowd and do the presentation. So I really appreciate you stepping in and letting me know.
All right, so we're ready to rock and roll then.
Awesome. So stochastics, in a nutshell, you're going to have overbought level at 80, and you're going to have an oversold level at 20. Favor buying at the oversold level, but wait for that cross back through. Don't buy when it's still on its way down, and you don't have to buy the second it crosses over. If there's room for a profit, then waiting just a day or two or waiting for a % or two is not going to kill you. But it could keep you out of a lot of whipsaws and a lot of false signals. So don't feel like you have to act immediately. So we've gone over 3 indicators: MACD, support and resistance, and stochastics. Any quick questions on those? Okay. And I did see, since a few people had mentioned about the not being able to see the bottom of the graph, I'm going to go back there for just a second, where you can see the crossovers below 20 and back above. So right here, you would have had time for a short profit. Again, this was on a downward slide, so it's not my personal ideal to get into a bullish position on a stock that is clearly hitting lower highs. Here's another one, though, where you had time for a short profit, and here's one where you had time for a big profit, another profit, and another profit there. So, and it's lining up potentially for another one right at the moment where that graph cuts off. So I hope you didn't think that those indicators were hard to use. They really are pretty simple, and the more practice you get with them, the more you're able to fine-tune them and really fit them to your own trading style. But being a trader myself, I always want to know how to make it easier. I don't have a lot of time. I'm pretty busy. I love training people in the stock market, and it does take a lot of my time. So I want to make things as easy as possible. And I can't do that if I have to look at chart after chart after chart to find the ones that are meeting these technical crossovers. So basically, VectorVest has a way where you can do it in a click. You can scan for the stocks that are having technical crossovers. And here's where I'll pop into the program for a minute. And I will size this down so you can potentially see it. All right. So we're in VectorVest scanning tool. It's called Unisearch. And over on the left-hand side, you'll see all the different categories of searches. There's one here called Pro Trader, and that is our technical analysis search tool, I guess you'd say. And if you look through these searches, as I scroll, you can see there's a lot of pre-built searches for really all kinds of technical indicators, including the 3 that we talked about. So I'm just going to run one. Let's say do this MACD crossover. And as I click on it, you'll notice the parameters fill in. So this is just point and click. These are already built, but if you wanted to add something or customize something, you just click on it. And it says that the MACD is crossing above the signal line in the last 1 day. The stock price has to be greater than $1, average volumes greater than 100,000, and keep me away from pink sheets and contra ETFs. So if we run that, and this is tick-by-tick data. Oh, it'd help if I was on the current date, though. There we go. So right at this moment at 1:34 p.m. at this tick, these are the stocks that are exhibiting that crossover. Now I can apply another filter if I'm not really happy with searching through 8,000 stocks for this signal. Maybe I want to filter by the S&P. So I'll go to filter by, just choose watch list equals, and S&P watch list, S&P 500. And I'll run that again with my new filter, and you can do this on your own watch list of stocks too. But just that quick, you've got a list of all the stocks meeting that signal, that crossover. And a big advantage here is that you also have them ranked from best to worst. We have an indicator in VectorVest. It's called VST, Value Safety Timing, and mathematical algorithms basically analyze dozens of fundamental and technical factors and then put them together in kind of a smart formula so that you know what's the best of the best. And that's how we have these particular stocks ranked at this moment. We can just take a look at one right here, and I'll graph it. And oops, I maximized it. I'm sorry. We'll go with MACD is what we're looking for. So I'll go over here to technical analysis, add that to my graph, and take off this other stuff. Oops, didn't mean to take off price. There we go. But you can see that really this is the first time that this stock has crossed above that histogram in the last few days. So it kind of went into a little bit of a pullback there, and now it's rising again. And it's rising really strongly, so you might want to even wait until the next day, see if that really holds. But this is an amazing time saver, and it's made more effective because you have that quality ranking instead of just a random order. And while you can run these searches any day, one of the biggest benefits of VectorVest is that you'll know exactly when to run these searches based on our market timing signals. So if I close this graph and go to our graph tab, here's our market timing graph, and instead of the S&P, we have an index that includes all 8,000 stocks. That's what you're seeing on the screen right now. And I personally like our RT Kicker combo timing system. We have short-term and longer-term timing systems, but this is one of my favorites. And it's so good at just being intuitive about market changes and direction. Again, it's rule-based. There's nothing opinion. There's no guesswork involved. We're not trying to predict where the market is going. We just have rule-based signals that alert you when the market's trend has changed. And you can see on October 24th, we had the first one for this particular little run we've been experiencing, and it's actually gotten to the point where it's been a while since our last one, so that lets us know that it's kind of fizzling out right now. Hopefully it'll get charged up again. But if we combine those two, if we marry market timing with stock selection, let me go back over here, we can get a lot better results. So you saw that first signal when this trend started was back on October 24th. So we can, by the way, I'm sorry, VectorVest has all the history since 1996 in the program for you to access. So you can go ahead and see what we said at any point in time, what stocks were exhibiting crossovers, all of that good stuff. So if I run the search back on October 24th of 14, it just so happens Actavis was still exhibiting that crossover, and we can then quick test the results, the top 10, and see how they performed. So this is the price that we found them at, and this is the price where they're at as of November 18th. So you can see on average they've gone up about 6.5%. Annualized, that pace is at 97% a year, and they did outperform the market, as well as you had 100% winners, which is always a good thing, of course. Now, if we go to the next date, if we run this search on the 28th, I would have been really shocked if Actavis also ended up on the top. So I'm glad that didn't happen. We'll go ahead and quick test the top 10. Completely different batch of stocks, doubled the market performance. Here we have the S&P 500 at 3.37%. Pace is even faster now, 121% a year. Let's go to the next one. What was I on? I was on the 28th. Oh, there's my little square. The 30th was the next signal. Only 3 stocks in the S&P at that point. Almost 8% versus less than 3% for the market. And one more. Oh, only 2. But we still have 2 winners. This time it pretty much kept pace with the market. As we saw in that last signal, the market's kind of flattened out a little bit. So it's not in that, that takeoff phase. So this is the search tool, but I also mentioned that you can actually be alerted to the trades. The trades can be delivered to you, and I have that hands-off portfolio. So of course I would need something to do that. And if I go into, let me find it here, I'm not used to this resolution, backtester, there it is. So you can actually historically test any trading system, again, from that 1995 on. This is that portfolio, that trading system that I mentioned to you earlier that I use. And it's called the Killer Crossover. I know it's kind of a weird name. We have several of them, but this is one that I modified for my own use. And currently, let's see, I ran this actually to be exactly 2 years, so not the same time I started my portfolio, but from November 19th start date to November 17th, it's up 48% with 82, almost 83% winners. Annualized rate of return is about 24% a year, and best of all, it has less than 10% drawdown. So that's a key thing for me. I don't like to watch my portfolio value to go down, so I want to keep my eye on the maximum drawdown. With this system, if I click on edit, I can show you that I'm using an 8% gain or a 20% loss. Now that sounds a little bit crazy, but because I'm using, and I'll switch back to Unisearch, a search that focuses on the stochastic, that oversold crossover, plus a 1 and 10 day exponential moving average crossover. And I'm sorting those results by the best stocks at the top, then these stocks are basically far more likely to go up 8% before they go down 20%. And I was able to establish that in historical testing first and then put it into action in live trading. And how I did that, well, you just saw the back tester. I'm sorry, I would show you how it works, but I know we don't have enough time. So I did my back test and said, okay, well, now I want to see how this works in real time. So I just click Convert, and I want to start, let's say, with an empty portfolio, or I can just continue from my test with all of those positions I still have. and it says Start Portfolio with the Genius on. So that's the tool that's going to allow me to trade this automatically, send me alerts when there's any new trades to be made. So I'll go ahead and open that portfolio now. And it's already telling me what to do. To go ahead and get Illumina, XPO, Sun Edison, IMFI, Banco, etc. So it's going to run throughout the entire day, always monitoring my positions. So it's completely hands-off. There's no emotion interfering with my plan. I literally just trade it. I think that's about all I'm going to have time to show you today. I would love to show you more. This is really just the tip of the iceberg. Here's a quick review. I know it's crazy small, but this is the trade history over the last couple of years. So you can take a screenshot of that maybe. And I'll just tell you really briefly about our offer. We have a risk-free offer, so it's 30-day money-back guarantee. We want you to have plenty of time to explore the system and see all the things that you didn't get to see in this 40 minutes. To do that, we're going to give you 10 weeks of VectorVest real-time. So that is tick-by-tick information. There's no extra cost for data feeds or anything like that. We just give it to you, 10 weeks of VectorVest real-time. You can run those pre-built searches so that you can in an instant find those stocks that are meeting the technical patterns. You can receive alerts of trade possibilities with a tool that we call Watchdog. So that's another alert tool in addition to the Genius. You'll save incredible amounts of time. You're going to have to find new hobbies. You're going to save so much time. Plus that full 30-day money-back guarantee. We strongly believe that our service is going to help you become a faster, smarter, better trader. That's pretty much our tagline. We've been in business for 26 years now, and it's based on just monthly subscriptions. So if we don't help make people successful in the market, they stop subscribing and we wouldn't be here 26 years later. We're doing all of this for $29. So you'll have access for 10 weeks for $29. That offer is going to expire in 24 hours. So if you'd like to take advantage of it, just go to vectorvest.com/trades. One more thing before I go, and that's going to be, I did promise you the step-by-step, click-by-click trading plan for that portfolio that I showed you. All you have to do is go to vectorvest.com/plan. They'll have all the settings of the search, complete trading plan, and step-by-step instructions so that you can set up that automation within VectorVest. And feel free to fine-tune it and make it your own. You know, that is certainly not the only way that you can trade. And of course, I do modify things a little bit when I'm trading options. I so enjoyed being with you guys, and I'm so sorry that I didn't have a chance to answer your questions. But if you do have any questions, feel free to call us at 1-888-658-7638, and I'll try to put that number in your chat. So, and there is the order link, and there is the trading plan. All right, thank you guys so much, and Reed, I'll hand things back to you.
Angel, it was great having you on. A lot of great information. Even though we did lose a little bit of the presentation due to the PowerPoint presentation, there was still a great amount of information that you gave us, and a lot of great feedback from the room as well. Guys, you're looking at a 30-day money-back guarantee with 10 weeks of VectorVest real-time. You receive alerts. You get the trading plan PDF, and that's $29. So I mean, you're really not putting in a lot of money to get a lot in return. You saw their track record. They know what they're doing. They have a lot of great experience in this industry, and so check them out. I went ahead and I put that link into the chat box. That's www.vectorvest.com/plan. Check them out. Angel, yeah, go ahead.
I'm sorry, there was just one question I did forget. Somebody asked me if there was training, and yes, there is a, every other week we do a live webcast for all real-time members. It's recorded, so if you can't attend the live version, you can watch it. We have toll-free customer support all of our reps actually use VectorVest, so they know exactly how to help you make money with it. And we have actually a weekly webcast as well that teaches you new trading techniques and just all kinds of ways to use the program.